Good afternoon, all. Coming to you from Traders Community. It is the 28th of December. Three more sleeps, and we are in 2022. Well, today we had a pause in the markets, other than the Dow Jones, which still managed to close up almost 100 points. We had the S&P after hitting a new record high. I believe it was the 70th of the year. Um, Finished lower, but only marginally by just under five handles. The Nasdaq fell 89 handles. That was the bigger loser out of the major indexes, and the Russell was down quite markedly again. Well, it wasn't down big, but it's been the one that's been recovering. And a lot of it to do is with a change in speculation flavor that started in the morning when we came in. As I've said many times, the crypto market is the beacon for speculation, risk takers, etc. And they were down quite marketably today, and we'll go about through that later. But Bitcoin, the main one, was down well over 6%. So we'll go through that. The strength today was in utilities. If you remember, they were one of the weaker ones. So again, when you've got risk on and risk off, people will go towards, unless it's a market collapse situation, they'll go towards what they perceive the safer ones. So today that was utilities, consumer staples, materials and industrials. The weaker one, of course, was information technology. You know that once you're talking about the major indexes there. So, and actually the healthcare had been up big almost every day, wasn't it, Alex? 52-week high, 52-week high. So that pulled back as well. We came in bullish. The market came in bullish, primarily because the CDC cut the recommended isolation time for asymptomatic people in half from 10 to 5 days. There's a lot of skepticism about that, so I think the CDC and the fear by it is quickly, if not already, lost credibility. So I don't think that was really the reason. I think the charts speak for itself, and we'll go through that in a bit. But let's look at the charts.
Can I add one other thing to that
Yep,
thought,
yep.
mate? I think another thing that's helped the market over the last couple of days is this sort of increasingly apparent dovishness of the People's Bank of China. And that's kind of gave a little bit of a bid, at least yesterday, to risk assets and especially the longer duration risk. And so maybe some of that's also being reevaluated a bit today. Maybe people are taking some profits too. But it did feel like that was another factor. And if we go back in time a little bit, when PBOC started to really tighten up the leash on liquidity, that was around March when we started to see a peak across a lot of the more speculative assets as well. So we know that sort of their position and how wide they have the spigot open, if at all, has a pretty big impact on price discovery too.
Yeah, good point. I did mention we're talking through that this moment. I think it was Evergrande was up 8% yesterday on that hope. And for those that trade the Aussie dollar or the metals, as Alex is talking about, iron ore, which had been on a bit of a tear, had a bit of a breather last night. But there's a good article actually on the site about that and the future forecast for that over the year. The analysts basically have got that very, very wrong. Um, and Japan, to that end, in that region, had a really powerful industrial production last night. So it's whether it holds on. But yeah, that is a big factor that just that whole region. And I think the big unknown is Omicron, the reality, the effect of it. I mean, not the reality that exists, but how it affects different countries. Some countries seem to be just out of control. Do we do a lockdown? Do we do this? A US, just look at the way it's handled internally. So that's a big factor, and that's going to affect sentiment, or is it just being neglected? That's hard. What do you think on that, Alex?
Think initial indications from what we've seen are somewhat encouraging. That we've had really authorities and also just metrics regarding COVID rates of infection, hospitalization, and death come in from South Africa, from various European countries like England, Germany, France, Spain. And really, they're all kind of showing the same thing. And obviously, it's still early on. We still have to look at more data and see, what it all tells us. But early indications are that this is 90 to 95% less fatal, that the infectiousness of it is much higher, but that once it gets into the body, it's less efficient at damaging our lung tissue and spreading to other cells and causing those cytokine storms that can lead to chronic inflammation and some of the really problematic components of both COVID as an acute disease and COVID as a sort of long disease, since some of that damage is thought to be related to those cytokine storms as well. So I think that overall, it's initially good news. We want to hear more. There is some bad news that comes with all this, though, and the bad news is that we're seeing that vaccine efficacy is reduced. So, authorities are recommending people get a third or even in some countries a fourth booster. And they're also saying with some of the mRNA vaccines that they may only last like 10 weeks before vaccine-induced immunity really starts to drop off, which is even faster than before, which was thought to be somewhere between 4 and 6 months for some people, up to 8, really, before you saw a drop-off in that vaccine-induced immunity. So it seems like with some of these subsequent iterations, these variants of the coronavirus, that vaccine-induced immunity from the original vaccine may not prove to be very effective in terms of duration. And
Yeah,
so that's something to
actually,
think about.
I saw it was only down to 5 or 6 weeks actually before it dropped off yesterday. I think that
So
was the
that's a big
Moderna one.
problem.
Yeah, yeah,
That's a big problem. And so one other thing, and this is getting off track with trading, but just a recommendation, anyone out there listening that's concerned about this, there are better masks out there. Masking is a very good way to have a deterrent for a respiratory-borne illness to infect your respiratory system. And Spirion P100 mask is the gold standard. It's 99.97% resilient against particulate matter. COVID, the coronavirus, when it's airborne, is lipid-coated. Most masks are not filtering lipid-coated particles or nonpolar particles from the air. So this actually does filter all those oil-based particles, including the virus. So just something to think about if you're in places with lots of people, if you're with sick people. These are not taking masks away from healthcare professionals. There's plenty of them around now. And then, you got your N95 as kind of like a distant number 2 because it doesn't filter as much particulate matter and certainly not at the same size. So, but yeah, overall, it seems like Omicron, the initial reaction just after Thanksgiving was overblown. It seems like the timing of those events were the release of that information may or may not have been with the idea of kind of pushing the market around, causing some volatility. But nevertheless, that was the end result. But we could see the reality is that it's not causing the same level of economic disruption, but most importantly, not the same loss of life and not the same degree of sickness from what we're seeing early on. So if anything, that could be encouraging for where this goes, because if the the current variant is more infectious and less deadly, and it's already become the dominant variant in pretty much every country it exists, then this could be sort of the later stage game of this pandemic as it morphs into something less and less able to interfere with society. And as society gets better and better at taking safety precautions, mitigating spread, dealing with infected people, having ways to mitigate any impacts and so forth. So I'd say, we're closer to the end than the beginning of this from all appearances.
Right, right. I mean, my main thought was that the way it's been handled differently, not so much on the disease, but the effect on economies. We have Holland, for example, locked down, and here it seems to be all over the place. But the relevance really is because we have New Year's coming up, so we're going to have a lot of get-togethers, etc. So I think if we get through that without some, and I think I'm with Alex that I think it's going to be more rational. That will be a real positive to the market. Obviously, and this is the reason I mention it, if governments pull a fear valve on it, then it could be really be quite detrimental throughout the world. Welcome, Amy and Sarah there. Thanks for joining us. So let's get back on track here, and that's important stuff because that's with Omnicom. I want to spend a bit of time on it with Alex. He knows it a lot more than me, but it is the one overhang right now of everything, pretty much, right? Everything else seems to become normal, normalized. I wouldn't say normal. So let's look at the hourly S&P contract. So this is the first time we actually got under the cage, and since the 20th. So it's been quite a run. But it's in a nice sideways pattern. I would have liked to have seen this test the top of the channel today and to see how it handled it. But what we did do, we rebalanced here, and that's important for when things get out of whack, right? So this fueled the bounce here. If this had gone higher here, and in fact away from it, it would have given me a better short. What we're going to look at tomorrow is if the Cajun gets through, it needs to really get through this tension to give us power. If it doesn't get power, this goes sideways to down to test the cloud. Now, we have, as what is more than likely at this time of the year, they window balance, right? So window dress, window balance, however you want to call it, to have this look better at the end of the year for their portfolios, for their results, for their bonuses. So very clear we're in that channel. So just keep an eye on that. And as I said, to motor on Murray Math point of view, we need power. And that is the count there. Daily, nothing really to show there. Exactly the same. Again, we got ahead of a Chico, and look how it flattened by the end of the day. So everything's trading technically very nicely. 5 minute, I don't think we really need to look at that too much because that's the hourly. When it goes sideways, I don't like to look too much short term because it can distort your view. Apple today did a really nice move up here, so we're able to take advantage of that. Look what it did. That's had high. Remember that correction high after the first run?
Yeah.
So that was plus 2/8 twice. So potentially from a bearish point of view, this is a double top inside that triple. But from a bullish point of view, these moves are healthy because to get through, just like that S&P we looked at, it needs the power, right? And I mean, I'm get pretty cynical in my old age, but I can't help thinking the CNBCs of the world and again a pump, the $3 trillion deal. Whether it gets there or not, 182.86, there's going to be a lot of attempts to talk it through there. In a thin market, whether that talks a herd up. But look what we held. We held all this today. That 182, what was it, 181.50 close enough was the top. That's this. It came down fairly sharply, but it held. This stock personally is one of my favorite trading vehicles because it is so liquid, it moves well, it's tight, whether you're trading options or stock. It's kind of like trading the SPOOs, right? So you can see there how that's finished up today. Just keep that chart up if you're trading it. The Russell was the dog of the day as far as stocks go. So we just looked at the S&P. This was an accident waiting to happen. Look how far that got above the Chico. And look what it was, plus 2/8 on your Murray Mac. Now, I watched this at 30 minutes, and I think we've explained that a few times. We closed down at this cloud, gave a good support. Now, 30 minutes, typically on the second one, you're going to get a more aggressive push. So this tells me there's just not a lot of big volume out there. Market makers are pretty well done for the year, as we know from before Christmas, right? I'll take that back. Price makers, as far as market makers who want to hold a position, are kind of done. And NASDAQ, whoops. Too many broken fingers, Alex. And there's NASDAQ. Started off in unison with the SPOOs, didn't it? And then it decided to have a look at its little brother. And just fell.
There was, when we started off the day, there was reasonably decent breadth in the NASDAQ, and that changed pretty quickly. The New York Stock Exchange had pretty decent breadth, and then it started to deteriorate later in the day. And as we close the day, we can kind of see if you just look at these numbers: 19 advancers, 25 decliners, 620 unchanged on the Nasdaq. So not a pretty halitosis breadth there, as I like to say. Then on the New York Stock Exchange, pretty much split down the middle: 14 advancers, 14 decliners, and then 6 unchanged. The volume tells the story on the Nasdaq, though. You had 2.1 billion down versus 1.4 billion up. And again, on the New York Stock Exchange, pretty much a tie match. You had the bulls with 1.3 billion up, and then down volume 1.27 billion. So, breadth across the markets wasn't spectacular. The more rate sensitive, riskier, techie, growthy stuff really got hit. If we just peel underneath the surface and look at the factors, we saw the only factors that were bid were low volatility large caps, value mid caps, and value large caps. That was it. The hardest hit: small cap growth and high beta large caps. And high growth large caps not too far behind those high beta large caps. Everything pretty much faded there, which was a pretty interesting reversal from yesterday, and certainly not what we saw on Friday either. And then in terms of sector performance, it shouldn't come as any surprise that the stuff that's more apparently defensive got a better bid. So you talk about utilities, they were the strongest, but then you also saw some of those late cycle plays. Industrials and materials had a bid. You also saw aerospace and defense, consumer staples, and then also airlines in the mix. So, across the tape, the strongest sectors were the things that probably fit in the later cycle in the defensive plays, and the weakest were things like solar, junior miners, silver miners, technology, semiconductors, medical devices, biotechs, pretty much the weakest in the pack there. So, across the market, there was plenty of, people out there looking at a thin tape and either sitting on their hands, not buying anything, or doing some profit taking, or maybe taking their very last tax losses of the year.
Yeah, to me, the market just looks tired, which is what you would expect. It's been up, 6% in the last little bit, Russell and Nasdaq. You've got a lot of, so this time of the year, a lot of the volume work you're seeing has a lot to do with your taxation perspective, getting or straddling, for want of a better word, the 21 and the 22s. You're seeing a lot of flows there. That tradition, so if you think of any of it from the Forex world, if you think of what spot, Tom next, etc. So spot basically means 2 days. So tomorrow being Wednesday would be the last time for this tax year for the ETFs that you may be, depending how you're going to pay them for tax. So all that stuff's under the surface in a thin market. I mean, volume was low today, as we pointed out.
Yeah.
Now, I just put up NVIDIA because this morning I mentioned that Japan was hot because of semis. We opened up like that hot, but look what NVIDIA did through the day. Just sold off all day. And the cloud held up, didn't it, on every other index, but NVIDIA didn't. It did get back over it. But this will be one to watch tomorrow. It's a fast
Agree, and
money
I
one.
think
It's a semi. Yeah. Go
And I
ahead,
think
sorry,
it's
mate.
interesting to look at the semi space too, because it really got a bit overheated. Some of it was, hey, there's all this pent up demand. Some of it was, hey, there's a lot more, actual legitimate future demand for all this computing as a result of this sort of metaverse idea, but also in more realistic terms, the idea that we're going to be using more remote capabilities. We're going to be doing more gaming and entertainment. There's going to be more need for 3D acceleration, for AI, for self-driving, for all these other endeavors. So really, a lot of these companies like the NVIDIAs and AMDs as examples have, a really bright outlook in terms of demand for their products. But the market, as it sometimes likes to do, it'll get a little emotional, a little ahead of itself. They'll get a little bit, kind of like FOMO'd into a trance and say, well, NVIDIA's hot right now. It's making all-time highs. I'm just going to buy it because of that. And then it almost becomes a self-reinforcing feedback loop until the buying exhausts itself. And adding to that, there was a lot of buying activity in the options in NVIDIA too, which just helped to add to that upward pressure, the demand for shares. So it's been interesting to watch. I agree. It's going to be really important to see how that closes out. Tomorrow, really this week, which will also be this month, this quarter, and this year to set the tone for 2022.
Right, right. There's a lot of bonuses to be paid, apparently. So that's a good segue into Johnny. Johnny's here. So we're talking about speculative and fear of missing out. A great example of that is not just the stocks related to like the semis and the tech stocks, and we saw that come off today, but the cryptocurrency themselves. So we saw today a sharp pullback, and I've got the list up there, and I'll bring Johnny on, but in a sec here. But look at how much the big caps came back today, Johnny. I've got them up from crypto.
Yeah, no, right. So I see that Bitcoin sitting just below 48,000. So we're down about 7%, 6 to 7%, and a lot of that is on the fear and greed indexes because there is a large amount of fear. There is a large amount of fear still in the market, most of which is by some of the short-term holders, and a lot of long-term hodlers are still holding, thinking that this is once again an opportunity to buy on the dip, and that would be, I'm not giving financial advice, some of the assets that are out, the digital assets that are high conviction, make sure you don't get into any of the more dangerous things right now. But some of the things that were on that initial chart, if you want to flip back the initial chart, the things that right now are really good buy point would be Solana, things like that, and Decentraland.
So 41 on the fear index. If I was talking about stocks, that would tell me they're not really that scared. They're getting scared. But if we look at that, Alex, whenever it gets hairy or way overvalued, he often shares with us that fear index for stocks. It's a lot different. So I would have thought, to me, that looks like they're not scared or not scared enough. But
so they're not that scared. But you could also attribute a lot of this to end of year profit taking, and maybe some things due to tax purposes, people what they need to do to take care of their tax positions. But the overall market, I think if you looked at coin being the leader, all these other tokens, altcoins, they're following the lead of Bitcoin, and has been fear, and a lot of it's come from regulation, a lot of it's come from different things, but there's the community that has high conviction. It's going to stay with it, and they're just going to push through. And some of these things,
certainly for the conviction there for certain stock. But so I see what that's done today is flow over into the more. So it's interesting. Like a lot of people, and I'm one of them is skeptical of this whole area, but there are some areas I'm not skeptical about. The reality is,
so Gala right there.
I look at more of this. Bitcoin has a $901 billion market cap, so it's real. So it does affect. Ethereum has a 450. So that does have an effect that flows on. I know there's a lot that are in it just for the fun and all that. Which one did you say? Sorry.
Oh, up top you had just moved over. Gala it had just had a recent run, and it's down 16%. So that's just an indication.
Oh yeah, they're volatile. Yeah.
How it's affecting healthy tokens that are things that are used, not just in. The ones that are used for in-game, and the gaming portion of the market.
So tell us about this ICP, down 15%. Do you know much about that? I just see it.
Yeah, well, made their debut at Davos, I think it was last year, and they're a project that is helping move over the Web 3.0 protocol using cryptography. So, interesting company, but right now, 15%. Good investment.
I wonder if Alan trades this, but anyway, I digress. So yeah, and Gala, the one you just mentioned, that's down 14%, but that's a cheaper one. Okay,
it's a big gaming one.
Let's go back to.
If it works for you all, I just wanted to just briefly discuss for a moment also that there, when you see a rout in crypto, what you're also seeing is something that is worth paying attention to insofar as risk sentiment is concerned. Because there's a lot of different asset classes where you could kind of describe them as, high beta. They tend to be kind of rate sensitive in the sense that they're longer duration. And so, when there's the perception that, those kinds of assets are less in favor. For example, when real rates rise or risk appetites decline, or there's more fear in the market, or just less buying participation on lighter volume days, you can see these things swing pretty wildly. And sometimes the path of least resistance can be down. And I don't just mean crypto, but I also mean things like growth stocks.
Yeah, they
We
all
saw a lot
relate.
of
Yeah.
those, and it's from similar flows, and so you can look at crypto as a bit of a barometer for a risk appetite. And if crypto is really getting routed, then you see that longer duration risk might see similar outcomes. And it's especially interesting on weekends when there's nothing trading to kind of see how this stuff moves around, because sometimes it gives you a little bit of a sense of what sentiment is for that stuff when you don't have any other measures for it.
Yeah, and it's your high risk grouping, which is why we watch it. I mean, I don't trade it, so
Right.
indirectly it does affect you. So you are trading it. Technically, here's Bitcoin real quick. What held it today was this 50, but you can see it's not that good. Bitcoin is the cleanest out of all the cryptos, but you can see still it's very hard. You're going to get stopped out a lot here. You've got to be on clean lines. But this is support. You can see that the cloud actually works quite well because it's measuring where everyone is. But that's that route. Last time we've done this big flag from a technical point of view. So what I would like to see as far as risk appetite is this just not have these moves for a while, settle down a little bit.
Yeah.
Um,
Yeah.
It's going to be volatile through the end of the year just because of the year profit
right. I mean,
taking
most
tax.
targets are, but that's something special. That little button. Okay, let's move on to oil. Oil just had its API came out. Um, as I've said many times, I'm going to look at the 5 minute real quick just because that came out. So if most oil people don't pay much attention to it, just the nature of it. We got a fair bit on versus EIA is tomorrow on that factor, but the bottom line is it was more a bullish figure, bullish result in the sense that let me just give it to you real quick here. While we're looking, but look at this chart today. Oil traded very much sideways today, but we opened up right up here. So it gave us a nice sell at +2.8. It was overbought. So this is, if you trade, if you're learning Ichimoku, learn the basics of what Chicow means. A lot of people don't pay much attention to it. These are 5 minute charts, it's not as good. But what you want to know is when it's overbought or right, and akin with Murray. So if Chicow needs to rebalance, i.e. the price has gone way up about it, looking back, and it coincides with a high Murray math level, you know it's overbought. Now don't just take that as a given to sell. Look for 2 to 3 things, but you know it's high risk. Once it came down through this tanking, right, that told you that hang on here, this thing's struggling. You look, and oil is also very okay, let me take a step back. The reason we look at all these different things is the macro effect. So most people don't think, I mean, there's lovers and haters of Bitcoin and the thing. The reality is it's part of the market now. It helps you reflect where the speculative end is. So even if you're not a heavy speculator and you just trade the traditional, the more defensive stocks or currencies, you need to know what that's doing because that will affect those as well. And so oil does affect the economy, it affects the mood, and all these things are interrelated. But you need to be successful as a retail trader. You want to look at what the professionals are doing and why. A professional, I don't want to. It doesn't mean you're just getting paid for it. You're earning. You're looking at certain things that have a longevity as trading, if that makes more sense. So you'll get to know over time what affects things at certain times and when they don't, right? So that's why we look at all those different things, and then you'll get ahead of the curve. You don't want to be buying Apple, for example, when it's 182. You want to be buying it when it's 170. But reasons why,
Right.
not just because it's cheap or good. But you could see when crypto gave it up again today, and then the Russell gave it up, it then also affected Apple. And Apple was the thing that was keeping you. I think Johnny made the point. Apple was what was keeping it all up today at one point. In the end, it gave it up too. So just quickly on that API. The Cushing number, which is the one you always should look at because that's the WTI hub, the futures hub, if you're familiar how futures work. That was a build of 1.5 million, sorry, not billion, that'd be a lot. Crude itself was down -3, and there was a small draw on gasoline distillate. Now that will be different other than more than likely on the EIA number. There's a lot of things at this time of year that different corporations will take things in and out of storage for tax reasons. So read up on that. And as I said, if you're going to trade this stuff, be able to handle it and be understanding. And don't just follow someone blindly, and it'll help your other trades. So that's, as far as that goes, that's the fundamentals there. I don't expect much to come out as surprises. As far as the geopolitical aspects of it, we've kind of had that with the Russians, with the Libyans, with the US, with their SPR. So here's our daily. You remember what we just looked at on 5 minutes? Look what we did. There's that Chico, right? And that's really just relevant with other things. So on Murray here, and again, remember, was it the S&P we just looked at that had not been
Yep.
under the Chico, the Cajun, right, until today, since the 20th? Very similar in here, other than here, right? And then we had that explosion. So this is, I use the term getting tired, perhaps it was the wrong word. It's more just rebalancing, catching its breath sort of thing. And you'll see this on the Bitcoin and stuff like that. In other words, all markets trade very similar. And last but not least, the daily. Look what that did. That was our target. Funny how that worked, huh? Pinged it today. So you have a game plan out there. You know where you're wrong, and you know how these affect other markets. I mean, if you trade, you don't have to trade oil, but you may trade Apache. You may trade Exxon or something related to it, right? You may trade the Aussie dollar. All these things interplay, and it's good to not trade too many things, but understand how the market's going on. Natty gas, I keep trying to stress this point. This thing's a wicked little bugger. And again, I saw all these posts when it went over $4 yesterday. Oh, Europe, they're all going to freeze. They're almost happy about it. Not natural gas people, but speculators that just, I'm not a fair of the glove speculator, right? Nothing to do with it.
And it really has
100%.
nothing to do with it, yeah.
The only thing it has to do with it is LNG. And America, we're shipping more LNG. I'll put my Texas cap on. More LNG now than ever, and we're overtaking other counterparts. So basically, the biggest natural gas exporters in the world are Australia and Qatar. But America is very quickly getting up there on that. The hub for that, the main hub is Sabine, which is Henry Hub. So that's when you have those exports get up, you might get a run like this related to it, right? But remember, it settles monthly, and each it isn't the same storage as oil. You can't put natural gas when things are full and where it is. So yeah, understand that domestic aspect of it, but it does affect, and I'll say that in the morning, it does affect the overnight. So what happens is you get the sell-off probably because Europe was down 5 days in a row of still crazy levels. Then that, if you know that's what they're watching because we're down, and the weather maps really had no change. But there's a lot of bad information or old information on natural gas weather. So that's that report. You just keep it simple. You know the Murray Math chain, right? It's just been in it for weeks. So try to avoid the noise, but I rephrase that. Try to avoid the noise affecting your rational position. You need to always have a high tweet. You see on Traders Community when we tweet, we kind of just try to tweet out what we think is going to affect the mindset. From the whole idea of it, of Traders Community originally was to help the self-directed trader, right? To what we doesn't mean we're always right. It's just trying to say, okay, this is what people are looking at. And Alex is trying to he's doing the same thing with the technical things that you need to look at and try and not get caught up in the greed and fear aspect, which I think he does a great job of if you follow his charts and everything. And not just
Thank you.
charts, but the understanding of how it all works. A lot of people just never get it, and Johnny
It's
here,
not an easy thing.
I got to give a shout out to Johnny. I mean, remember we're all friends too, so I don't want to sound like we're just patting each other on the back. If you heard us through the day, there's not a lot of that. It's more abuse. But anyway, I digress. Johnny picked up, so to pick up Ichimoku, GAN, and Elliott Wave more than anything is because they're esoteric, but they are maths-based. So you want to understand your maths, but you want to understand the art of it rather than the science. A lot of people never picked it up. Johnny picked that up very quickly, if you remember. So I said, you should look at this, and finally he looked at it and he goes, damn, this guy's pretty cool. But he picked up it's kind of like a song, Some songs are just terrible, but there may be something you pick up in it. And Alex the same. He was new to Ichimoku not long ago too, but look how quickly he's immersed in it. So you either get it or you don't. Is kind of the nicest way to say that, because different minds. So other people just there's certain other chart patterns that they love, and you don't have to all be tech. And that's the point. What I'm trying to get to is you need to have a balance between the fundamental knowledge, the macro knowledge, the technical knowledge. At the end of the day, it's all how the market interprets it, because you are trading a market. The market's always right. And that's why I spent a little bit time at the top of the hour on Omnicrom. I know that's an emotional thing with anti-vaxxers, pro-vaxxers, Democrats, Republicans. It's just, give me strength. In reality, just use common sense, and that's what makes a successful trader right there, or investor. You don't have to trade this stuff. It all
just
depends
life.
on your viewpoint. Yeah, that's why I like Apple. It's so big and so deep, you can trade it clinically. And when news happens on it, it reacts to it. And you'll see, okay, well, that must matter to them for a few. It will matter for them for 2 or 3 days, right? Them being the rest of the herd, right? Which you're just part of, So be wary of people who think that they're above the market and the market's wrong. The market's never wrong. And anyone tells you they've never had a loss, I know on Twitter they just delete half of it, but
Yep, at least half.
Yeah,
Yeah, so that's a big red flag for anyone that's looking at like who they're trying to learn from. First of all, if they're not teaching you how to trade, if they're just telling you what to trade, that's nice and all, but that's not really helping you become a better trader. So, nothing against the shot callers that are calling out things, and I'm sure some of them get a lot of stuff right. But ultimately, if you want to have the tools, you need to be self-reliant, because there's not always going to be someone there to tell you what to do. You got to really learn these things. So if you're following people on Twitter, try to focus on the people that are trying to help you. They're trying to provide useful signal within all the noise. They're trying to teach you how to be a better trader, how to manage your risk, how to get disciplined, have a good mindset, what data matters, what doesn't. Those are the kind of accounts that are really going to add value. And there are accounts out there that might take away value by adding noise to your feed. So just be careful out there. And I'm not trying to cast any aspersions against anyone. I'm not going to name any names. I just want to say that you curate your own experience, and what you get out of FinTwit really has to do with the effort you put into that process.
Well, yeah, and there's some good good groups around the place, like on.
Funny,
I'm trying to think of the name of it. Stock Twits, different Discord rooms. So find something that you're comfortable with. If you just want to day trade stocks that go fast and hard and they got good systems on it, that's good. But but learn why they're doing it rather than what do you call them, shot collar? I think you just said.
Yeah.
So if you're just following, you won't know when you're wrong. You won't know when it locked out. You won't know why a certain thing. And it's not just stocks; it's anything, right? I'm more a futures and commodities trader actually than a stock trader. But there's some. So I like Apple because it trades real. I like trades like I like things that can't be purely manipulated, right? Because that's your danger in a stock. Like we see that. I mean, we were going to do a class. We'll get around to it one day. Of how, like on a biotech stock, will rip up more than biotech than anything. That's why I'm using it. Will rip up because it's got the ultimate a motive to it, right? I mean, that's going to save cancer. That's going to do this. So it tends to go up more than what it should. Now, then it depends. The pros will come in. I'm going to short this crap. So they short it and they might get caught. They may be right. End of the day, the order flow affects it. And a lot of people just simply can't short. So keep that in mind. It's not that they hate shorting, they just can't short. Be it for stock availability or a cash account. I wasn't aware of that till I accidentally found it out from Madavi. I don't think he's back yet. But little points like that are real. Now, just think, okay, I'm this company, then I'm selling, I need cancer. I mean, I don't need cancer. I've developed a drug for cancer. It's very expensive. How am I going to fund it? So that's where, if I'm that guy, I've got to do a secondary to raise money at a higher price. These things are all part of the whole thing. And that's through all markets. You know, for example, China and Australia are at war. Why? Like, I don't mean with guns, but word of mouth, etc. China tried really hard to break Australia's back. Australia said, go stuff yourself, and battled. That upset a lot of people of a certain political persuasion. But look further down the road how that's evolved. That affects all those commodities that in our side of the world, vice versa, right? I mean, there's so many flow-on attempts, but that'll affect individual whatever you're trading, you know.
Yeah.
So that is one day we'll get to it, and we can pinpoint exactly how this particular stock traded one day for all those factors I just mentioned. I think you will get more out of it. Just understanding the mechanics of it. So there's a fundamental, how the way a market works, and the technical is your picture of what it's all telling you. I mean, it's just classic. Some of those charts we went through there. If anyone's there wants to, I think we've done ad nauseum where we're going, the support, resistance, and the likely to the end of the year. So if there's any of those that is joining us here, if you'd like something, just give us a shout out, and we will try and talk about it because it's thin and I don't have many positions on. And really, and you're never going to get it right. For example, I thought the spoos were going to give a run to that channel, as I said today. I mean, it was set up for it perfectly, right? I thought it was going to nudge this before it came off right around here. It didn't. So, you know, but you keep it tight and you look at the market. And I think if it did, Apple would have had a shot of that 182, which it needs to get over. And they're all, so where everyone is around 180. That's the match. Just look at the open interest on it. And we're at the end of the year. So you can kind of work out what goes on if you think in the mind of someone of a big position, someone who's a market maker. And then there's the battle. They want it as high as they can, but not too high to get their bonus. Because if they go too high, January gets harder, doesn't it? So, you know what I mean? So all those factors, believe it or not, affect something, you know. So that is a nice uptrend, wasn't it? So, any thoughts, Johnny? You spoke just from the stock market point of view, actually, because rather than the crypto, because you trade a lot of stocks and you're relatively new to it, but you have already picked up great discipline. Anything you can share with the viewers?
I just learned a lesson, which is always have a plan, and also see what you can stomach. Never risk more than you're willing to lose. And then also, last money, don't gamble. There's, like Mate said, plenty of times I've believed in something that some drug company came out with, and you get caught up in you'd like the stock to do, and the powers that be and people that also get into it dictate, and the market, like Payne said, it's always right. So
Right.
those are the lessons that I've learned. There's just more things. I'm polarizing too, which value stocks, there's plenty to be made in those. Apple is one of them. But overall, it's just you have to figure out your game plan, and if you're gonna gamble, if you're gonna make sense of what's going on, if you want to do just options. So options are a good way to go right now, and you have to learn which stocks you're willing to really focus in on. I always think the more I know about a company, the better off I am. Some people don't even care. So
Yep.
like to look with Apple, for instance. I had read and got information about the stock first ran up. Prior to that, they were coming out with an announcement about the iCar and about some other things, and it just seemed like a little catalyst that all that came, the dates that were predicted. And so there's information out there, and Apple's real good about keeping things tight, but there's no way to always keep everything tight. So that's just my point of view. Safe, and don't spend your money on foolish things.
Yeah, I mean, good points there. Yeah. Go ahead,
I would like to just, yeah, sure. I'd like to just add on to that. I mean, I think mindset and discipline are really important. I think every trader who has found any degree of success, who hasn't, and is totally honest with themselves and with everyone else, has to say that we've had losses. Some of those losses happen because we don't have a system in place to manage risk. Some of those losses happen because we believe a narrative, sometimes our own narrative versus what the market's telling us. Some of those losses happen because we think that the market's going to give us a second chance because maybe it did on the last trade and it doesn't on the next one. The losses just keep growing, right? So one of the lessons that Johnny is talking about that I think is important to everyone listening, whatever your skill level is, especially if you're still struggling with this, is make sure that you manage your risk first, that you know your exit, that you have your maximum risk quantified, and if it's exceeded, you're out without any emotion or second consideration. Because with a trade, you're really trying to preserve your capital so you have the capital for the next trade. And the one thing about trading, even though it doesn't seem like it at the time, there's always another opportunity. Always.
Right. I mean, yeah, you live to play another game, sort of thing, as they say. But yeah, the hardest thing, it's kind of like
Taking a loser.
a good comparison is a house. Everyone thinks their own house is worth more than what it is, their home, as opposed to home. So the home they live in. And in reality, for 98% of people, that's going to be your biggest ever investment. And it is an investment. So if you think how much you think your house is better than the neighbours and worth more and it's never going to go down, a lot of people take that same emotional attachment to a certain stock. The reason I trade Apple is I don't care about their iPhone or whatever. It's very tight. It's very heavy. The options have 1% spread half the time, 2%. I go to where the volume is. I know I'm up against some really, really good market makers. I mean, I've done all right in my day over the years, so I know kind of what they're thinking. But I want to have good market makers because then when it spins, I don't want them just dropping their bids and offers, which is I've tried on certain options, and that's why I call BS and a lot of these people on the social media sort of things, because there's no way in hell. And then that they've got out or done what they've said, right? I haven't been able to get out of some high names. I mean, you can get out if you want to, still $3 lower than where it is or something. So what attracts me is more liquidity, and that, and and options are. You've got to understand what you're doing though, and Alex said that earlier about, I think what stock it was, might have been the video. People just buy without knowing what they're buying. If you can't get the price you need, you don't get in, because if you're paying so much for something, you're assuming someone's going to pay even more than you. It's like pass the parcel. Is someone going to be oblivious to risk as much as you or price? Actually, I hear Davi's joined us now. Some thoughts on that, mate? We were just talking about, Johnny was talking about having a plan and risk management.
Listening.
Anything you want to add there, mate?
Today was, I thought we're gonna be up in the morning. I had a pretty big position when the market tanked. I got behind the 8 ball in the futures, and I was playing catch up the whole day, and didn't catch up. But I did do some stock stuff, and the stock stuff was okay. I mean, I shorted my old friendly Novavax. I played that, and I played I just short that every day. I get a chance. SIIG. I played that one. That was pretty good. I got a little position on right now, trying to see if it's still moving. Then I played this other one, what was it?
BFRI?
No, it was BB.
Oh, beta or something.
Yeah,
Yeah, I know what you're talking about.
and
Yeah.
and I did like 2 trades of short of an Apple, and that's about it.
Yeah, Apple doesn't. We were just talking about it. Why do I like Apple? I mean, we joke about it, but it just gives you so many good longs and shorts. You know.
I'm so
Um,
sick of Apple.
I know he's sick of it, but it's good to trade. I mean, to me, it's like that in the Spurs. Why bother with anything else? I think I said that today. Why do I
Uh,
bother with this thing goes
the
up
other
and down $4?
traders in Apple, and they'll just clean your clock. I'd rather go where there's violence and movement, where you got to, you know, I don't got that patience with Apple's trading sometimes.
I don't know. It's patience. I mean, that was pretty instant when it failed at 180, 130. Went straight down $2.
When
Pretty
it's
quick.
violent, I like to play Apple. Otherwise, there's too many.
Oh, yeah. So that's a good point, people. What I look for, if Apple stops doing these moves, then you move on to something else. But to qualify for mine, it has to have liquidity, plenty of market makers on it. Has to have good optionality. By optionality, I mean the ability to have big open interest on it, not just some cheap gamma which I'll do sometimes, 3 or 4, 5 times a year. You'll find something that some hedge funds way oversold calls or puts, usually calls. That's what GME was all about, right? So I'm not really talking about that. I'm talking about that I can buy $4 or $5 away, puts and calls. There's depth both sides. I mean, I was trading one line today that had 2,000 both sides that they were showing, right? 1 cent apart. That's, for me, I like it.
Yeah,
But the flip side of that is when it's not moving. What was that? What was that one that wasn't moving and we got stuck in a few weeks ago?
good
Uh,
traders in there.
yeah. So you want moving. You are trading, but you also want be able to be nimble. You know. But that's horses for courses. A lot of people hate that, but Davi doesn't like Apple for the reasons I like it. He doesn't like it. The reasons he likes other stocks, I don't like it, right? So we're all a little bit different, and that's the other thing as a trader. Find something that suits you. You know.
Well, I'm a drilling. I like the rush. And
I mean, yeah, I'm like an old punch-drunk fighter, I think.
I want to make some money. In some of these stocks, you can't really make some big cash because it's hard to make cash sometimes.
Right, so on Apple, if you want to make money, unless you've got a spit lazy 70 million sitting around, you use the options and you'll make very, very good money.
Yeah,
But
you're good at those. I'm
and
not so
so
good.
to do that without the gambling aspect, it has to be liquid, right? You know, um, and yeah, at one stage today, I mean, and you can have puts and calls on at the same time. You can do strangles and straddles. And on days that are volatile like that, and it's been like this for a while, you can take it off. There was a time today, remember, Alex, I made money on the put while I still had calls.
Yeah.
And the calls, some of the calls I ended up not making money on today. But so you're not going to make money all the time, but it's part of a book. I mean, it's obviously nice when that all happens, but you know, that's not what you're doing. You're doing a part of a book. You're not punning. I see that stock meta hitting lows today, just then. Anyway, I digress. But yeah, it's different markets, and Madavi, like I've said before, is one of the best I've seen at reading order flow, right? So order flow on Apple is going to be more market maker price action where it is on a chart. You know what the book is. You can work it out pretty much if you know those blokes, how they trade. Order flow at Madavi is really good at picking up what's coming through on those faster stocks. Which is a big skill of years of experience, right? And so if you're following some of these trading rooms, the fast stocks, that basically what's up overnight, what's gapping up and down, you want to understand that yourself. rather than following someone, because it may be too late by the time they said, "Oh, I've sold that,
Don't
bought
dump
that."
follow somebody, and they'll get you and they'll dump you their shares.
Right. That's talking about that. Here's a typical one. CPOP just ripped up 30 cents. So that's a 2 to 3 that just went 286, 20 cents, 286, 301. So that's going to be something, and they're all in it together, right? So you don't want to be the last guy out. Better to get out early than late is a good motto to have, you know.
And like we've seen it all the time. One guy's going to be so loaded up, and usually everybody's following him, and he's got the big positions. He's going to dump it on everybody.
Yeah, he's got to get out. It's not the Salvation Army.
He's got a big position. He knows there's a crowd following him, and he's going to be the first to take advantage of it.
So that's a dilemma if you're in that without understanding what they're doing. And there's some good rooms that do have that, and they'll try to teach you. But a lot of people, look, 90% of people just want the easy way. W.D. Gans said, I can teach anyone how to make money. But it's like, I can't remember his exact number, but let's say it was 80%. It's thereabouts. 80% of you will lose because you don't want to put in the work, or your ego, you think you know better, etc., etc. And he has 3 rules for trading. It was discipline, discipline, and discipline. You know, in other words, you can learn everything how to do it. You can study every bloody book in the world. Mummy can give you $1 million, but if you don't have that discipline of a plan, which is what Johnny was saying, then it ain't gonna happen. You know, because the ego will take over, or the fear will take over, or the greed will take over.
Oh, going, mate. I just bought it.
Which one? C-pop?
Yeah, I just bought some.
Yeah, I just had a nice little pop as I saw go by in high.
Yeah.
So
When I get
trade different, and you don't have to do, like, we'll muck around in some of these stocks after hours for, you know, when it all sets up, you make a little bit of money. It's not all about making $1 billion on every trade.
at 305.
Right, yeah, see, that's a nice little. So, like, for example, Tilray is something that I always thought was a great short, and I shorted, but I had to hold for a bit of pain. Now I look like a legend because it's so low and you've made money in the short. But believe me, there's plenty of losses along the way. But there's reasons why I had that. The reason I mentioned it, I just saw it hit a low, right? But so have a plan of all your different stocks and what suit your capital, your personality, etc. And sometimes I went off the grid this year for 2 or 3 weeks. I had nothing to do with markets, right? You got to cleanse your mind. Some people that doesn't work for. I like to be away from it sometimes, you know, because you get a new perspective in many different ways. Some people, they got to have it every day and that works for them. So just find out what works for you. You know, we're all different, right? I tend to go a little bit extreme with that sort of stuff. But hey, I literally went off the grid, didn't I? Remember that, guys, with my sons. Okay, we're going to walk about. But anyway, in a serious note, there's all different things, and I think that's the point we're trying to get across and find it. Like, and we've all had. We can sit here and tell you horror stories, and we learn from those. Each one of us, right? Every trader has.
Absolutely. And I mean, again, like, and one of the things that happens on places like, you know, social media is there's this unrealistic projectionism. There's a lot of people trying to act like they've never had a bad trade, or they're just always killing it, you know, or whatever. And that's fine and all, but you got to look at it very, very kind of skeptically, because some of these people are selling services. Some of these people are just putting on a persona, and some of these people don't even trade anything, and they're just there to kind of participate socially.
Yeah, I reckon a lot of them don't trade. More than don't.
For guppies, in my opinion.
Yeah.
And so, you know, just take it for what it's worth. Like, I do read people sometimes feeling down, like, oh, I never see anyone talk about their losses. I'm stuck at trading. No, like, there's people I know that make like triple digit returns, you know, that have more losses than winners, but they're cutting their losses and they're letting their winners ride. And they're having and they have a systematic approach to their trade. I mean, that's what it's all about. It's not about like hitting a home run with every trade. It's not going to happen. And you got to be realistic with yourself. Like, if you have a loser, don't just beat yourself up. Oh, well, cut your loss, on to the next. And like if you have that mindset, you're just very mechanical, non-emotional, doesn't bruise the ego. It's just about kind of, move into the next opportunity. The other thing that happens is you shrink the size of your losses, but you also shrink the opportunity cost of holding those losers instead of getting involved with a more promising trade.
Well, that's a big thing, actually. And you will have a loss that'll be devastating. Unfortunately, that everything you've had, you put everything in perfect, the fundamental, the technical, and just something broadside. You never know. Expect the unexpected. So you just never get too big. But you've all had those ones where you go, and then sometimes like I said, it's a science. I mean, sorry, it's an art, not a science. So you'll give a little bit of wiggle room sometimes. Sometimes it'll work, sometimes it won't. And that's what keeps it interesting. But I mean, I remember an old legendary trader. I won't mention his name, but you'll know him if I did. But he said, think of the worst. This bloke. This is when I was a lot younger. He's an older, experienced guy, and he said, "You're gonna think of the worst girlfriend you've ever had, the worst." Wife you've ever had, etc. Roll out the worst experience, the worst car, blah, 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 all this stuff. The market can be that and more.
Oh, yeah.
So, just all the things you never thought. So that's why you want to have that, you build your defense first. I don't want to scare you from doing it. I just want to be realistic about it.
Realistic,
But
it's important.
Yeah, and it gives you the best opportunities of so many times, but to do well, you want to have a clear mind, a clear game plan as much as you can.
Yeah.
However you achieve that by just take a break off the desk, meditate, pray, swim, run, whatever it is for every person, you got to give yourself that. And what that does is just don't be too hard on yourself. I have one of my best mates, and Madavi knows him. And he would laugh. He knows exactly what I'm talking about if he's listening. But he would punch himself. Remember that in the head? Not mentioning names. But that's what worked for him. I'm like, dude, that's a little bit hardcore. But I'm not saying be like that. But if he had a better way of releasing steam, it would be better. And it's the mind. It's all the mind, the power of the mind. I know that sounds very new age in today's world, but that's real, right? So
you think make more money, a guy who makes 90% of the time money, or the guy who makes 60%?
Right, exactly, and not even that sometimes, right? So
yeah, the guy could be 40% even. Who do you think makes more money?
Right.
Chances are, the guy's making 90%. Great, but those 10% losses is taking.
Yeah. That's the guy that averages generally, doesn't take a loss, etc. I've seen that in some of the funds I've been at, and it affects the guys around you. Believe it, I could.
I mean, guys, I never take loss. I just hold it. I'm like, all right.
Oh yeah. There's some people like that. I mean, so your losses can also be, as Alex just alluded to. You mightn't have taken a loss, but your unrealized is big. Your loss there is obviously there's a loss of capital. There's time value of money. There's opportunity. It may be weighing you on mentally. Sometimes you just got to cut it. It's like a cancer, like a bad. That's what the guy was getting, like a bad marriage, or bad whatever, bad relationship. It can be brutal if you let it to be. It can be wonderful if you let it be. So, and you're never going to get it all right. So I tend to get out earlier than what I should many times because it's better mentally, And if I miss it, I go, I should have held that. Then within 5 minutes, it's forgotten. You want to be in that situation, not forgotten of what it did. You want to have a chart in your mind. You just say your charts are down, but you want to have a memory of what that stock had done, and that's all the chart really is. So don't forget that, but do forget the euphoria or the despair, because that'll ruin you.
Absolutely.
And don't get into the gloating bit. Oh, I made $1 million here, and don't go the other way either too much, because that'll affect you. It's no one's business what you make or lose. Believe me,
Loading, you mate. That's where I disagree with you on. Loading, I think, is a good thing. You know,
But all you do
wish
is
you would
create
say that.
enemies.
it's
So
like the
I've
guy who
been
scored the
there.
you know, the guy who scored the touchdown has got to do his little dance. Otherwise, why?
Oh,
You know,
yeah. A little bit of a dance, but that's what I'm
oh
talking.
no,
You know what I'm talking about.
those guys would
Some of
do a
those
dance for
blokes.
20 minutes if they could get away with it. They just can't do 20-minute dances.
Yeah. But scoring a try or a touchdown is a bit different, though.
It used to be like that before. That, if you remember back in the day when he scored, those guys used to do like a bunch of dances and stuff for a long time. So they put in penalties if you do too much now.
Yeah. But I mean, it does make the game more interesting, you know.
Same thing with trade.
But there isn't a psychological damaging from doing that. That's what I'm talking about. The swings, it's entertainment, right? So,
Well, I'm already psychologically damaged,
but
so I think.
from memory, you weren't a running back or a wide receiver, so you didn't get to do many dances, mate. You were a defensive player.
I tackled quarterbacks in the end zones, and sometimes they fumbled, and I caught them. But I did play running back when it was my first year a little bit, so I caught a touchdown pass my freshman year. And then I was on the kickoff return team when I was in college. They kicked the ball to me one year. Oh man, they lit me up like a Christmas tree.
Yeah.
Tennessee.
Yeah, I know. I played footy for a living for a while.
As the defense, so let's kick him in the ball.
Yeah.
Let's see how I'm like, holy shit, this ball's coming to me.
Well, I must admit, and it annoys people, but whenever I always blame it on concussions when I get something wrong. So.
Yeah, I've
Hey, your
noticed that.
C-pop's getting a pop. Hey, your C-pop's getting a pop.
It is. That was a nice
Rub
little
it up
pop.
the
So
same.
that's
Yeah.
so sometimes late at night we'll do some of these little trades, guys. They're just momentum trades, and in the
I
thin market. So there's two sides of the thin market. I'm not doing it, but he's Madavi might, as you heard. But in a thin
yeah,
market, they can go more too. You just don't want to be the last guy standing. You know, you want to be the last guy standing. You don't want to be the last guy holding.
stick around and look for anything you can catch in the aftermarket when your days could be better.
Right. There's been some during earnings season in stocks. That's when you trade stocks rather than futures. You know, or there's a horse that says times for different markets. But you don't want to spread yourself so thin that and I see that like being natural gas and oil. I know pretty well when it's the end of a big bull or bear run, when all the speculatives or newbies come in and start trading those things. You know,
And we saw that not too long ago this year in Natty Gas.
yeah, and you'll get that every year. That's the good thing, you know. It sounds terrible.
It's like a machine that's chewing people up.
Hey, I think we're running this thing a little bit. Let's go. I
The
think we're good.
C-pop. Yeah, I see that moving up nicely.
All right. Anything else, mate?
No, I'm good. Well, everyone, thanks for popping in. I know you're busy this afternoon, Madav, so thanks for that. Thanks, Johnny, for your insight and on crypto and just the trading stuff that you're new to and what you're sharing. And as always, thanks, Alex, for all the wisdom and the chart talk we all shared. And we will see everyone tomorrow. Remember, it's really thin. Trade accordingly. Enjoy your family. If you like, everyone I'm sure has got every neighbours in and friends in and not what. So don't neglect that. And Nick, I know he's spending time with his family over the Christmas period here. So that's a good thing. Okay. See everyone tomorrow and thanks for listening. Follow us on our social media channels. Traders Come, Markets for Mayhem, Madavi 4, Meta Johnny, what else? Novawave, and the websites Traders Community and Traders Markets for Mayhem. See you all tomorrow. And what do you always say, Madavi?
Always be killing it.
See you guys. Bye.